Come in, Lorenzo. Okay, some of you are here and some of you are there. So sign in if you would, Kevin. Got 3 or 4 out today. They're live streaming. And remember, if you're live streaming, give me a page summary before Tuesday. That's the next class. Okay, and please practice with us on whatever we're doing. Robert is here. Caitlin is not here. Giorgio is here. Kevin is here. Kayla Lambert said she'd be here today. Liv is here. Lorenzo is here. Terry is live streaming. Tanda is here. And Savannah, I think, is going to add today. So anyhow, you don't have to sign that now, Livy. I found my roster. If that gets back to you, Robert, you don't have to sign it. Okay, we were in chapter 2 and just trying to tie up some cost terminology, which a lot of you heard before, was direct, indirect, fixed or variable, or semi-variable, period cost, or product cost. You're familiar with most of those, but you got a double dose of it, I suppose. And what are the problem assignments for today, Kevin?
32, 34, and 44.
All right, we're going to have to practice a manufacturer statement. We're going to look at these problems. Now, the other day we did problems. Lorenzo, I don't know if you had these down or not. We did problems 10, 12, 13, 14, 19, 22, 25. And today we were supposed to do 32, 34, and 44. Now, however, I want you to look at a couple of things first. We looked at 22, I think. I look at number 23, if you would, in your text on page 50. That was not assigned today, but there's a couple that we need to look at that were not assigned. 23, it simply asks you indicate whether each of the following terms is associated with manufacturing or retailing or service. Now that's easy enough. Depreciation factor equipment, that's definitely associated with what, Kevin?
Manufacturing.
Sure, manufacturing. Prepaid rent, who do you think that might be associated with, Giorgio?
Service.
Any of the 3. Prepaid rent can be service, manufacturing, or retailing. How about audit and fee expense, Robert? It could be all 3. All 3 companies could be audited, internal or external. And how about merchandise inventory? Olivia? Merchandise inventory is associated only with one. Which one? Well, sure, it has to be retailing. All right, sales salary expense. Tana, which one do you think that could be service? associated with. Definitely retailing. Could be a service to go out and sell, but mostly retailing. And you know, the factory goes over to home office. You got to sell those finished goods too. So it could be associated with a factory and definitely retail, maybe service. All right, finished goods inventory, Lorenzo, is only associated with which one?
Retailing. Retailing.
Retailing? You know better than that, Lorenzo. Which one of these three has finished goods inventory?
Oh, I'm
Yeah, that's the only one. You knew that. Cost of services rendered, that would probably be which one? Anybody?
service.
Service, sure. And cost of goods sold would probably be which one? All right, if we're going to take cost of services rendered as service business, then we'll take cost of goods sold for manufacturing
And retail.
and retail. And then direct labor wages, Kevin, has to be only one. Which one?
Manufacturing.
Only manufacturing has direct labor. Okay, just wanted to run through that with you, even though it was not assigned. Let's see, I want to run through. All right, I want you to look at number 26. We did 25. Let's look at 26. 25 is just like 26. It's like one we reviewed yesterday. We're not going to take but a minute on it. This company manufactures stainless steel knives, following our factory cost. Stainless steel, oil and grease, plastic for handles, wood blocks for knife storage, then labor cost, and what is the direct material cost for 2013? First off, which one do you think are direct materials? Would stainless steel be a direct material? It would. How about equipment, oil, and grease? It'd be indirect. How about plastic for the handles? Yes. How about wood blocks? You know, you get a wood block and you put 5 knives in it and you got to see it. How about wood blocks for storage?
I would say yeah.
You know, that one, I don't want to say it depends. It's not part of that knife. We know the stainless steel and the plastic is part of that knife. If you sold a single knife, then you don't have that wood storage thing. Now you're going to sell that wood storage thing with the knives, but I don't think it's part of the direct materials. Okay. What does the direct labor cost? Is the equipment operator's direct labor?
Yeah.
All right. How about equipment mechanics? That's indirect. And factory overhead is indirect. Now it says, what is the total indirect materials cost and direct labor cost? Now we're just going to look at these real quick, at these answers for number 26 before we move on. Look at your answer for number 26. Stainless steel, plastic, and not Lorenzo, they did put in the wood blocks. Because they're selling the knives as a set. If you sell the knives as a set, the wood block becomes part of it, you could. But if you left that out, it would also be okay because you got materials, labor, and overhead to build those blocks. It's a separate item, in my opinion. The equipment operators is your only direct labor. Your indirect materials is oil and grease, which we knew. Now, your indirect labor is your mechanic and your supervisor, which we pointed that out as we went along. Okay. Okay, before we get up to 32, it's just labor cost classification. I want you to take a minute, read number 30, jot down a couple of answers for number 30. Take a couple of minutes, read number 30, jot down a couple of answers for number 30. You folks at home, live streaming today or whenever, you should do this with us. So we're gonna have a pause for a couple of minutes. Okay, somebody should have that first one, letter A, answered by now. What was the actual factory overhead cost?
I think that's $430,000.
How much?
430.
You got, who got 400? Okay, let's see. Now, what it asked for, what were the actual factory overhead costs for February? Property tax is one of them. 48,000 divided by 12.
But why? Only 2 months passed, January and February, and you paid.
Yeah, well, wait a minute. Let's read the thing. They makes one product line in February. They paid 530,000 factory overhead cost. Of that amount, 121.4 was for January factory utility, and 48 was for property tax on the factory for the year. Now, if we're just doing January cost, 48,000 per year has to be divided by 12. All right, but to go on though, all right, February's factory utility bill arrived on March the 12th and was only 81,000 because the weather was significantly milder in January. So your actual, golly, your February, that don't make sense. February's bill arrived in March because the temperature was milder in January. Again, that don't go together real good. All right, let's see, 50,000 units. What were their actual factory overhead costs for February? All right, we do for February is 1 month. We do have to get this property tax of 4. But now you've got to finish this out, Tanda. You only did the property tax overhead cost for remainder was 44, of course. Actual factory overhead cost was 530,000 minus 124, minus 48, minus 81 is equal to 443. Is that what you got, Georgia?
No, I got 430.
You got close. All right, well, what's the difference? Okay, 530, we know we take out the other 44 and we include 4. This one's okay. What is this 81? What does the book tell you this 81 is?
Utility cost for February
But you didn't get the bill to when?
until March.
March? All right, so we don't have it yet, but that's a plus. See, we're taking out the 44, 530, we're adding 81. Now, how come the 124 came out? What was it for?
For January utility cost?
All right, but we're only talking about February, aren't we?
Yeah.
So February's utility cost was 81. January was 124, so take out January, add February, and take out 44,000 of property tax. That's all you gotta do. Okay, but to finish this one, actual per unit direct materials, direct labor costs were 2430 and 1095. What was the actual total product cost? All right, now that should be easy. We got 433,000, 43,000 divided by 50,000 units is 886. Add the 8 materials, 2430, labor 1095, overhead 886. The cost per unit is 4411. Now that was just a thinking little exercise. Now we're going to get down to number 32, which I asked you to look at. All right, cost of goods sold, cost of goods manufactured. This company had the following inventory: raw materials beginning, ending, work in process beginning, ending. They have materials used, you didn't have to go through any format. And they have labor used, 748. And they have overhead of 564. But cost of materials used. So do we even need the beginning and ending materials inventory? Do we need beginning and ending materials inventory? We do? Well, we don't have the purchases.
So we can calculate the cost. Oh, no, we don't.
Well, calculate the cost of goods manufactured.
No, we don't, because it says raw materials used, so it all.
Right, you already got it.
Yeah. Well,
So if we're just calculating cost of goods manufactured, they're there. Those three are just there, just add them. Wait a minute. Yeah, materials, labor, and overhead. So your total cost to be accounted for, manufacturing cost, I call this manufacturing cost, 2,296,000. Now you do need beginning and ending inventory for the whole statement. So that's beginning work in process 372 and subtract out ending work in process 436. Your final answer is $1,860,000. Now your solutions on Moodle should be correct. They are for spring 2018. I corrected those yesterday, I hope. All right, now we've got to do work in process. Finished cost of goods sold. Per schedule of cost of goods sold. Now you need beginning. All right. You need beginning and ending finished goods. So then you take your cost of goods manufactured, add to your beginning finished goods, add to 1,860,000, subtract the ending finished goods. So now this is something that you've done along and along and along. You've done a lot of it. Now, 33, I want you to look at 33. All right. 33 was not assigned, but 32 was. Now, if you practice 32, you could do 33. All right, now 33, and irresistible art products, collected piece of art. You've got raw materials, work in process, finished goods, beginning, ending. During the month, the company purchased 656 of raw materials. Now, you need the raw materials inventory, Giorgio. Prepare schedule of cost of goods manufactured. Okay, I want you to do number 33, A part. You got to find the materials. Now, let's do the materials together to speed you up. What is the beginning materials? 93, 93.2. See if I can write that on here. Beginning materials was 93.2. What was the purchases? How much did you purchase? No, they give you direct materials purchased again. I mean, used, don't you? You don't have to do that. So just give me a quick statement. That statement will look like pretty much like this. Put that in a manufacturing statement for problem 33. You got about 3 or 4 minutes. Those folks at home should participate. Put it in as good a form as you can for a manufacturing statement. Okay, Olivia, you got about 5 minutes to do part 1, problem 33. Okay, does anybody have for number what, 33? Anybody have the cost of goods manufactured? What you got, Giorgio?
1,918,400.
Anybody else got 1,918,400?
I mean, I got it different because like the total raw material used, like I know it gives the materials used, but like if we purchase this amount and we do like beginning raw materials plus the purchase minus the final, the ending balance of the raw material, like we get a different number, so I don't get it.
But did you have purchases though?
Yeah, exactly.
How much was purchases?
Was 656,656.
All right, now I agree with you, Lorenzo. You took raw materials of 93.2.
Yeah.
And you added 656, and you got materials available.
Yeah.
And you subtracted 69.6, and you got raw materials used of how much?
I got 679,600.
All right, now I'm trying to see. All right, the book has 504.
Yeah, that's why it's different.
All right, let me try to see what happened there, Lorenzo. Now, Lorenzo, you got 679.
Yeah.
All right, and Giorgio got 504, right?
Yeah.
You're both right. You're both right. Now, why are you both correct? Okay. When Giorgio calculated 679, that was raw materials used, which included indirect materials. And you could figure out, you could plug in that indirect materials, which goes into overhead, was 175.6. So you're both correct if you took out that amount for indirect materials. So you're okay. Lorenzo, you're on the right track. And Giorgio, you're on the right track by just using this. But if you give both of these figures, though, remember, there might be some indirect materials built into the 170, which is 175.6. And then if you got that much, it gave you direct labor. Now, how much overhead did it give you? All right, it gave you overhead, number 33. That's why I want us to look at this one. All right. Factory payroll costs for July were $788,000. 75% was related to direct labor. Now, what is 75% of 788?
I think 591.
591. What is 25% of 788?
197.
All right, now we found the indirect materials, we found the indirect labor, and then they gave us overhead of 600,000. All right, overhead charges for depreciation, insurance, utilities, and maintenance. You see, they didn't warn you that some of that labor and materials were indirect. That's why I wanted to look at this problem. Now you've been warned. If you have a problem or something like this on a test, you know to take out your factory overhead out of wages and materials. All right, you were supposed to do number 34. You're supposed to finish this one, of course. Then you were supposed to do number 34. If you do the problems that I request, you'll have no trouble doing a manufacturing statement on the test. You should have no trouble. So The answer to this was 2,644,1, and I don't think there was any tricks on this problem.
34.
Yeah,
Can we review it? Because,
all right.
labels.
We may need to then if they threw some tricks in, so let's look. All right. Number 34. The cost of goods sold was 2,644,000. All right. That's given, right? Now you've got beginning. Now, do you have cost of goods manufactured, Giorgio?
You need to work backwards a bit.
Huh. Do you gotta do number 2 before you do letter A? You gotta do B before you do A?
No, I mean, no, like you do first the cost of goods sold, and then like you pull out the cost of goods manufactured out of the cost of goods sold.
Okay, that's why I'm wondering, Lorenzo. We know we have beginning inventory, 125.
Yeah.
We know we have cost of goods sold of two. Now that give you ending inventory, didn't it?
Yeah.
All right, so you work backwards. Okay, you didn't have to do B before A. So if we had cost of goods sold to ending finished goods, we got 2,662,000. Now, if we subtract beginning inventory from that, we got 2,537,500. So we did not have to do B before A.
Yeah.
You get that okay, Georgia?
Yeah.
All right, now, in B part, we know a couple of answers there. All right, beginning work in process was given. Beginning materials was given. Ending materials was given. And they gave you purchases, didn't they?
Yeah.
All right, if they gave you purchases, then you get purchases available and you get materials used. Direct labor, was that given?
No.
All right, was overhead given?
No.
Really?
I mean, it was given a percentage. It was given that the overhead was like 225% the direct labor.
All right, so overhead is 200 and,
25%.
all right, so 225% of 400. Now, how do you say to get your direct labor?
I mean, it becomes like an equation.
Right.
X.
Yeah, but without doing the math, all right. Okay, ending working process is what, just 25% of beginning working process?
Yeah, that's 22,500.
Right, that's the 22.5, 25% of 900, 90,000. So you calculate this, all right. Do we have to work backwards on? Now, cost of goods manufactured, we had that from part A, right?
Yeah.
All right, we're gonna get to ending inventory, 25% of beginning, right?
Yeah.
We're gonna work backwards to get total cost to be accounted for, 2,560,000, right?
Yeah.
We're good up to here. Were we good on?
Then we're gonna deduct direct materials and we're gonna get some
Right.
of direct labor and overhead, and then
You've got direct materials
We're gonna calculate the percent.
and you've got overhead. If subtracted from total cost, you'll get labor of 400. Just a little bit of working backwards. All right, that was number 34. Number 44. I'm gonna look at it real quick, and then we'll give you some assignments. Now, 44, for your homework assignments, you're going to have quite a few journal entries, service business or manufacturing. But to review these real quick, we bought raw materials. No, we put materials issued to production. Now, the way that works, you've got your assembly line, got your materials warehouse, a foreman or a superintendent in the factory, they requisition these from the warehouse. When they get requisition, that's when you make the entry, work in process, and credit raw materials. That probably goes up to accounting. They send the forms up to the accounting department, and the accounting department then can make these entries. All right, here to pay direct labor payroll. You're paying out cash. We know that could be salaries payable, but it did say pay. So debit work in process and credit cash. And here, manufacturing overhead control, evidently, this is wages payable, and that was indirect labor. Just reviewing these real quick with you. Now, number 4, your debit overhead control and credit accumulated depreciation. And why they call that overhead control is that is your actual overhead. Later, we got to put this overhead into working process, either predetermined or actual. All right, here we got some more manufacturing overhead. Salaries payable, that's for supervisor. Here we got some more factory overhead. That was for indirect materials. Here we got finished goods and work in process. Then we can sell it. And B part, it asks you to figure the work in process beginning plus materials, labor, and overhead cost to account for goods completed, and you can find ending work in process. All right, now is this clear here? 800,000 of materials. That's clear. 800,000 materials. All right, labor 720 should be clear. Okay, the beginning and ending. Now, where do you get to 270? Draw yourself a T account.
Yeah, add all the.
Add 232.5 in a T account. 1021, 32.8, 25.4, and that should give us
I don't
270.
think that's 270.
Huh?
I don't think that's 270.
It better. Let's go
Can I
back.
go up again? I'll add up.
I just add them up real quick. 232.5,
Plus 10.
1021. Oh boy, we'll see.
That's already 300.
I know that's already 334.6. All right. Add 32.8. And add 25.4.
That's 392,800.
They plugged it in. I don't know why they had to plug it in,
Well, I think,
but total cost to be accounted for. If they gave us this figure, we had these others, we had to plug that in, but it should have matched what we added up, Giorgio, but it didn't. So we'll have to do the plug-in figure. Sometimes I don't like plug-ins, I like actual. All right, now for homework, now we're not finished yet today. I want you to read chapter 3. Now, chapter 2, I want you to do a few more assignments. We're going to practice those statements a couple more times. We're going to practice journal entries for various types of business. All right, there's 5 exercises or problems on chapter 2, 35, 39, 47, 49, and 51. All right, we're going to glance at chapter 3 today. Remember, chapter 1 will not be on a test. Chapter 3 will be on a test in chapter 2. Now, we spent 2 weeks on chapter 2. Well, let's say a week and a half. We wait the first day and look at chapter 1. All right, we'll finish up chapter 2 on Tuesday. But we're getting into chapter 3. Now, chapter 3 is going to be some more old stuff for you. You remember all these things: overhead rates, flexible budgets, and variable and absorption cost. All that's thrown into one chapter. So pretty soon, after about 3 or 4 chapters, we're pretty much wrapping up what we covered in managerial. Okay? But it's a good review for those. Okay, let's glance a little bit at chapter 3. Why and how are overhead costs allocated? All right. I think you know how. That's that predetermined overhead rate. Why? Because we don't have the actual yet. What causes under overapplied overhead? We'll look at that. What impact different capacity measures have on setting the rate. Remember the old high-low method? How to manage use flexible budgets, absorption variable costing. Now that's a whole lot of stuff in one chapter. And how is the method of least squares used? Now I think we had the method of least squares in managerial, but we didn't. All right, we didn't do that, okay? The actual cost system, you use actual materials like an overhead. In a normal cost system, we have to use a predetermined overhead rate to do our bids and so forth. All right. Giorgio mentioned this the other day. How do you determine an overhead rate? And Giorgio said something like you take all the money, which was allocated to factory overhead, and he said some kind of base. Your activity level, volume for a year is your base. Here it's direct labor hours. So your overhead is $20 per direct labor hour. Now it could be machine hours, or it could be direct labor dollars. All right, these three, direct labor hours, direct labor costs, and machine hours are normal ones. But here are some more: production volume, number of purchase orders, how many times machines set up, or material handling. There are some other ways, but you've only heard of these 3: direct labor hours, cost, and machine hours. A denominator is on the bottom of a division problem. Here are machine hours. Here are machine hours. This is for variable, 750. And this is for fixed, 1260 per machine hour, based on 50,000 units. Now remember, this is not going to change. 630 will not never change. All right. Now here, for 1 month, activity level times a predetermined overhead rate equals overhead applied. And when we get overhead applied, we debit work in process and credit variable factory overhead. Okay. Now over here, we have actual machine hours, times 750, that is equal to 32,250. Okay, we've made this entry before, but we didn't do variable and fixed separated. We always use 10 overhead. Here's for your fixed. 4,300 machine hours times 1260. That's 54,180. Now we've got all of our overhead. All right, we've got 32,250, and we got 54,180. That is applied. That may not be actual. Now, combined journal entries, debit work in process and credit overhead, variable and fixed. Now, if your actual overhead is 220, your applied overhead was 260. Here, in this problem, it's 86,430, so that's not the same thing. Now here, if your actual overhead is 31 and 55, we add those together, that's 87,355. That don't add up to those. That don't add up. It's just a different example. But if you got, what do you do, Tanda, do you remember? What do you do if your actual overhead is 220 and your applied is 260? What do you do with that 40,000?
You close it against cost of goods sold.
You can, or you can allocate it where? You can allocate it between three different things: cost of goods sold, finished goods, and work in process. All right? And they tell you that the 20,000 was over applied. Now, that would reduce cost of goods sold, wouldn't it, if it's over applied?
Yeah.
So we'd have to debit 40,000 here to make this balance, an overhead account, and we would have to credit cost of goods sold. All right, then you'd increase cost of goods sold if it's reversed. If overhead is under applied, then it decreases net income. If it's over applied, it decreases cost of goods sold and it increases net income. You know, if cost of goods sold is decreased, that will make your net profit, cost of goods sold subtracted from sales, your net profit higher. All right, if it's immaterial, that's we debit or credit cost of goods sold. But it's material, we prorate it with work in process, cost of goods sold, and finished good. We prorate it, we do a fraction.
What is prorate?
All right, let's say work in process was, for simplicity purpose, 200. Finished goods was 100, and cost of goods sold was, say it was 500. Now, if that be the case, you'd prorate, you'd add those three up, and you would get 800, 800,000, 800 million, whatever you want there, and you'd put 2 over 8, 1 over 8, and 5 over 8, that'd be your fraction prorated, Giorgio. We'll practice that later, okay? Alternative capacity levels, the denominator level, capacity measure, volume, or some other. Theoretical measure, a practical measure, or normal or expected. So we'll need to look at what those mean. All right, theoretical capacity, everything is perfect. No breakdowns, no holidays. All right. Practical capacity is theoretical capacity reduced by interruptions, holidays, downtime, startup time, machine time. Usually results in underapplied overhead. Normal capacity considers production levels, fluctuations in cycle, expected capacity, we'll look at that later. All right, now we're down into mixed cost. Okay, let's do this before we call it a day. If you like algebra, you can use that little formula anytime you want to. We didn't use it last semester. All right. But if you like algebra, little math equations, please use that. All right. We're going to do the high-low. Again, you don't have to do the method of least square. Now, here's the way we looked at it last semester without the algebra equation. We can do that again. We take the high of 9 and the low of 46. We get 4,400 difference. We take the high cost of 35 and the low of 21.8, we get 13.2 difference. We divide the dollars by the unit difference and get 30 cents a unit variable cost. All right. Now take 9,000 units times decimal 30. Let's do that. Take 9,000 units times decimal 30.
$2,700.
How much?
2,700.
Now subtract fixed cost of,
800.
Subtract 2,700. 2,700 from 35. You get how much? 800.
Yeah.
All right. Now multiply 4,600 times 30 cents.
1,308.
All right. Now subtract how much?
1,308.
Wait now. I'm sorry. Take 4,600 times 30 cents. I don't know what I told you.
Yes. 1,380.
That don't make sense. Uh, 4,600 times 30 cents. Try that again, Kevin. 46, 13, what? That'd give us 21.80. We should get 800 again. We should got 800 again. We got 800 one time. We should get 800 again. All right, we'll be practicing more of those examples and make sure we're on the right target on that. All right, real quick, we're going to do a flexible budget again at different levels. And we had this last semester. We'll get into it come Tuesday. We'll look at absorption versus variable costing again. And we know that absorption costing is what we've always learned using GAAP. Variable costing is a contribution margin statement. So we're going to look at those once again in this class. Okay, I think most of you are packing up, ready to go. So we'll call it a day. Those of you all out there, I hope you got the homework assignment and practice a lot of these.
You have a good one.
Okay, take care. But we're dismissed for the day until some of you have a good break for tax class.
See you in Texas.
Okay, take care. Enjoy.